Hello everyone, my name is Fred and I am your host. Welcome to Investing Wise Academy. If you're new to our channel, subscribe now because we upload videos that can help in your wealth building. Today's video is the third part of our 4-video series about 22 ideas for passive income which you can make $28,000 per month. With that, we recommend you check also the other 3 videos of this series. So, without further ado, let's get started. How many stocks must you purchase to earn $1,000 per month? The stock market's complex environment is the first thing that comes to mind when you think of it. It's easy to become lost with so many perplexing charts. However, everyone is aware that you can purchase stocks and then sell them whenever their value increases. But there's another strategy employed by seasoned investors to increase their wealth. In 2018, Warren Buffett's 5 key investments brought in $3.8 billion in cash. Do not misunderstand. He did not sell his shares to profit so greatly. However, these 5 businesses made a ton of money throughout the year. These businesses were required to split their profits with Warren Buffett because he is an investor in these businesses. That is what dividends are. Dividends are the real passive income. Since the dot-com bubble, investing has changed significantly. Before that, investors' top priority was to fund businesses that would be profitable and distribute their profits to them since they had a right to those profits as shareholders. But when business people like Jeff Bezos entered the picture, everything changed. The objective had changed from maximizing profits to expanding the business, even if it meant foregoing any dividend payments to shareholders. The strategy is to continue operating at a loss until you control the entire industry and then generate profit since you will be the only player in the market. A company that only burns cash and isn't profitable looks like a bad business. And for the past 25 years, Amazon has operated in that manner. Despite being valued at $1.6 trillion, it has never given its shareholders any dividends. Because it was reporting a loss, it evaded taxes for 20 years. Walmart was ultimately worth 1/3 of Amazon.com. Amazon might seem like a better choice if you want a more promising stock in the future, but Walmart appears to be a better choice if you want passive income. And there are numerous instances of this in the stock market. Only a small number of tech firms offer dividends. The remainder, especially the larger ones, would prefer to reinvest their profits rather than pay you. So, in this video, we will share the 5 best dividends stocks you can earn passively as part of our 22 Passive Income Ideas series. Number 11. Dividend stocks in Microsoft. Microsoft's market value was $1.941 trillion as of July 2022. According to companiesmarketcap.com, Microsoft is now the 3rd most valuable company in the world. But if you had put just $1,000 into the Microsoft IPO, how much would your money be worth now? Your $1,000 would have become $1.6 million as of 2018. And consider that the stock price more than doubled in the previous 2 years. You would have made much more than that. As of July 1, 2022, Microsoft's stock had a most recent closing price of $259.58. Its stock was trading at $69.49 5 years ago, if you'd like to check. The dividend yield for the year is 0.96%. Even though Microsoft's dividend yield isn't particularly high, it still exists and the business is expanding at a rate that has never before been seen. In the next 2 to 3 years, I won't be surprised if its valuation reaches $2 trillion. Therefore, you should consider Microsoft if you want a very safe investment that is expanding rapidly and paying consistent dividends. Number 12. Dividend stocks in Johnson & Johnson. Without a doubt, you are familiar with this business. It's one of the oldest businesses around. It is a sizable medical enterprise with numerous companies operating under it. Every nation in the world has its products available on store shelves. Although it hasn't seen growth in stock price like some other tech companies, this one is the king of dividends. It is one of the safest investments you could make. It has increased dividends for more than 59 years running. They distribute a $4.52 dividend per share, yielding a dividend of 2.52%. That exceeds the payments made by some of the biggest corporations. Since that merely beats inflation, I am aware that some of you are not impressed. However, you must take into account that returns are lower the safer the investment is. Additionally, it is developing a pandemic vaccine. If it is successful, the value of its stock might rise as well. If you are leaning towards long-term investing, Johnson & Johnson might be one of the safest passive income stocks because, historically speaking, for 60 years, it hasn't just been paying dividends but also increased them. Number 13. Dividend stocks in Apple. It is a business that makes you preferred brand of smartphone. You probably already know a lot about this company, so it doesn't need an introduction. However, let's examine its dividend yield. As of July 2022, its annual yield is 0.66% or $0.92 per share. Do not be alarmed by the fact that the dividend yield is so low. The issue is that the stock price has been rising so quickly that you need to consider the surrounding circumstances. Apple had a 2% yield over the previous 10 years. It fluctuated between higher and lower values, but it was consistently close to 2%, and the business is in such good shape that it has recovered and set a new record high even after the pandemic caused it to lose about 30% of its value. Year after year, the company's revenue has been rising ever since the iPhone was created. The company still succeeded in maintaining its revenue at $260 billion in 2019. Although the smartphone industry has stopped expanding in recent years because it has reached its limits, the pandemic showed us that the company was among the safest in the world and that nothing could stop its expansion. Number 14. Dividend stocks in Lowe. An American retailer with a focus on home improvement is called Lowe. In the US and Canada, the business runs a chain of retail stores. In North America, there are 2,015 hardware and home improvement stores operated by Lowe's and affiliated companies as of November 2018. It is the country's second largest chain, and it was established in 1921 and has expanded ever since. Like the businesses we previously mentioned, it suffered greatly as a result of the pandemic but quickly recovered. One of the businesses that suffered the most from the overnight loss of half of their value was this one. Its current annual dividend yield, or $4.2 per share, is 2.37%. In addition to the fact that they are secure in comparison to the rest of the market, you must also take into account the fact that their stock is rising. For instance, Lowe's stock rose 30% over the previous 12 months. You are profiting from the increase in the stock as well as having passive income coming into your account because it is also paying a dividend. Additionally, you are certain that your investments won't vanish because they are a powerful company, and the current pandemic is evidence of that. Number 15. Dividend stocks in Home Depot. The largest home improvement retailer in the US, Home Depot, offers services, equipment, and supplies for building. It runs a large number of big box stores throughout the United States and its territories, including Guam, all 10 Canadian provinces, 31 Mexican states, and the Federal District. It offers a higher dividend of $7.6 or 2.72% than competitor Lowe. With solid financial records and $151.2 billion in revenue the previous year, the company is eager to capitalize on the digital age. Since December 2017, the business has been using the One Home Depot initiative to invest in digital channels. Although the dividends paid by these 5 companies may not seem impressive, when it comes to passive income, you want something secure that you don't have to worry about daily. Many businesses offer significantly higher dividend yields, but the stock price can fall precipitously at any time, and those high dividends won't make up for the losses in the stock price. That is why the safest companies on the market with dividend payments and steady growth are included on this list. And that's it for today's video. What's your favorite among these 5 companies in terms of dividend stock earning? Tell us in the comments section below. We highly suggest you watch our other videos in this series if you like this one. The links to those videos are available in the description down below. Give this video the thumbs up it deserves and subscribe if you haven't. Thanks for watching. Again, I'm Fred and I'll see you in our upcoming video.